The number one secret to us is really defining that really good customer avatar. For us, it has to do with a bit of a solution-oriented nature.
So now let's dive into the number one secret to building your business with the exit in mind. So when you're coaching, consulting, even for yourself, what's the number one way to make sure you're keeping the exit in mind?
Well, I mean, at the end of the day, a profitable product builds a profitable brand and builds a profitable company, and obviously a good profit and loss statement. So it's really understanding the customer solution. The number one thing is really putting yourself in the mind of someone else, really stopping, as they say, to walk a mile in someone else's shoes, to really understand the solution that you're trying to provide for that product that's going to build a brand of solutions for a specific kind of person, or what we refer to as an avatar, a profile of a person. If you can really put yourself into that person's needs and wants and desires, and really adapt what they're doing and understand what solutions and things they're trying to do through a product format, that's the way we solve those in a basis of products, then you can double, if you double your understanding of the customer, you will double your revenue. So we really spend a lot of time putting ourselves into the market focus, where we've gotten really good at reading what the market wants as opposed to telling the market what it wants. I think that comes from that bit of adaptability and flexibility in my past to really look at that customer. So the number one secret to us is really defining that really good customer avatar. For us, it has to do with a bit of a solution-oriented nature. So let me give you an example of what that means. Instead of, for example, looking at a customer base that says, hey, I'm willing to wait for an hour and pay $300 to have that abscess tooth taken care of from the dentist, we're looking for the customer base that says, hey, you know what? I want that out in 10 minutes. I'm willing to pay $500 for it. And that's the solution that I'm looking for. And if you provide that level of solution, certain aspects of the business model work out. And a lot of people focus on the ideas that if I don't sell the $300 solution, I'm not going to have a mass market appeal, which is actually kind of a stinking thinking, as I refer to it. The truth is there's just as many people buying the $500 solution as the $300 solution. So really the secret is understanding that customer avatar, really driving into the solutions that they're looking to solve, what they're really trying to solve, not you necessarily, which is typically a profit-oriented focus, but a solution-driven business model with products that actually meet that solution.
Beautiful. I like that. Double your understanding of your client or customer and double your income. Understand your avatar, making sure you're providing a solution that they really want, not one that perhaps you think you need to provide. Is that a fair summary?
Fair summary, right? Because that leads to a multi-product brand structure with each product being profitable that goes to market, right? A minimum profit requirement of that product to be accepted into the portfolio. It has to perform over a 90-day period under certain metrics and conditions that run into an annual run rate for that product. That's our way of looking at it from a bit of it. As long as we're fulfilling that customer need, we'll meet those requirements. All of that obviously rolls into a good 12, 18, 36-month run rate of growth, year to year growth, and of course, the increase of that portfolio and brand that gives it a good exit potential.
Perfect. So that's step number one. What's step number two to building your business with the exit in mind?
Step number two is ensuring that you have good systems, processes, and an efficient game plan in place to repeat that model. It's not so much that I get up to the plate and, to borrow a baseball analogy, expect that I'm going to hit a home run every time that I get up to the plate. If you can bat a 200 average, you're going to be in the top 10%. So it's what I call the lottery mindset mentality. It's this idea that if I step up to the plate in business, I'm going to hit a home run, and anything shy of that is not going to be acceptable. So what we look at is diversification of the product line, even the brand line, to lower the risk and increase and kind of widen the yes on the brand with the customers. To ensure the stability of the business. And through that comes a process or a pipeline, which we have developed over years of doing these businesses and growing them and exiting them. So it's more of a predictable base. So again, the process and procedures and game plan are very important to building a standard operating procedure that can be repeatable, not just for us, but for our clients. It's one thing to say, I built a great store and I built another great store and I built another great business. It's something else to say, I have many clients who has exceeded their own expectations, even exceeded our expectations, following a simple methodology that we deployed that they can take and replicate to scale.
Got it. Okay. So systems, processes, procedures, building a consistent way to be able to diversify and apply that to perhaps different product lines to diversify your income streams and making that all just seem together. Is that a fair summary?
That's a fair summary.
Very cool. I like that. All right. By the way, you can learn more about NeoTwa at Voltage, D as in David, M as in Mary.com. That's voltagedm.com. So what's step number 3?
Step number 3 is really understanding what the market will accept for the product and brand. And so let's take a look at kind of what's an acceptable measure of business for an e-commerce companies. If you have a single channel of Amazon only, what's called fulfilled by Amazon or FBA, it's a way for us to automate the procedures, the process of the end mile to the customer for the products we choose without us having to have a lot of operations, overhead, or employees. That gives us the flexibility and freedom of building a model with a lot of upside of economies of scale. Gives us operational independence in many ways. Those are all attractive qualities. The third thing is really to build that business that's attractive to the buyer. All right, it has to have a good upside potential, meaning that it has not been fully exposed to the market for the products and brands you're serving. Amazon, for example, is about 31% of the e-com sales market. The other 60, 70+% is out in the world of e-com. That could be major sites, it could be QVC, it could be other components of radio, television ads, etc. That brand has not made itself a household name for yet. So as we use the FBA channel and we look forward, if it's a single only channel and we're going to sell that, in the last 18 months, there's been almost $7 billion deployed in buying only that Amazon FBA channel. There's about 62 plus aggregators now that are purchasing these and adding them to portfolios and brands, what others are using as a wealth without Wall Street strategy. They're purchasing these companies inside the aggregators and allowing basically the aggregator to become the passive income opportunity for the investor. We work in a process kind of similar to that by teaching people to understand how to build with the buyer end in mind and the exit in mind, so that everything is staged up from the very bottom of the foundation of business building, so that business can be exited. That's down to even the chart of accounts, the bookkeeping, the processes, the automation and components of that, as well as the ability to make it passive for the person who's running this company prior to actually exiting. So we actually can exit the client from the business prior to actually taking it to market, making it very attractive for the buyer who's looking at this. Now, it has to at least have a 7-figure revenue and have a minimum of 20% net profit on it. If that's the case in that business, it's a very good acquisition for many partners out there in the space.
Fantastic. Well